As commodities, and let's just take a look at this past week. Let's start out just seeing where we closed for the week. Taking a look at corn, we closed about 12 cents, a little over 12 cents higher in the March contract, just shy of 360 on the settlement today in corn. March soybeans up 10 cents on the week at 1037 and a half. March wheat up 12 cents today, 416 and a quarter in the March contract as well. Gains there all week. Taking a look at the livestock, December cattle was up about 50 cents on the week at 108.72 is where we seen the settlement today. And hogs was the big winner this week, up just shy of $6, 5.97, right at 56.72 in the December contract. Looks like the energy, in particular oil, is going to be steady for the week right here at the top end of this trading range. We're still trading right around this 51.50 area at the time of this broadcast, and the dollar looks like it's going to be up about 90 points or so as well this week at 101.60. So seeing a big reversal on the dollar chart this week where we did push lows, but we were able to bounce back and find some strength in the dollar. And the stock market looks to be closing at record highs again as well at the end of the week. So we are seeing some strength in the equity markets, along with our agricultural markets this week. The main driver this week, or the main point of interest this week in the grain market, was our monthly supply and demand report. It's one of the more least anticipated reports of the year. It's where the WASDE goes in, and they just take a look at the demand side of the equation, and they leave that production number alone. They'll take a look at that in the January report. But going into the report, we were expecting small, subtle changes in corn. Maybe we would see a little bump up in ethanol demand, which has been very good to this point. We're producing above what we need to meet the expected bushels or the grind for the year in corn. Might be a little too early in the year to change anything. And the USDA basically did not change a thing. It was an exact a photo of last month's November report. We still left that carry out right at 2.4 billion bushels. We left exports alone, and we left the crush alone as well. Exports has been very strong for corn compared to last year to this point. But if you take a look at the 5-year average, we're sitting about right at a percentage of what we traditionally move at this time of the year. So we're right in line to meet our export projections at this point. Take a look at soybeans. We were looking for a bump up in crush, a little bit of a bump up in crush, small one if that possibly. But most of the trade was looking for at least a small bump up in export demand as well in this report. And surprisingly, the WASDE left that alone. Left the carry out right at 480 million bushels, and it was the exact same balance sheet as we've seen in the October report, or excuse me, the November report as well, which was a little bit of a surprise. We did see a little bit of weakness on the release of this report, but it's very quiet. The only thing that we did see change in the soy complex is we did see a bump up in soy oil demand, and it's basically might be in relationship. It was about 250 million gallons. It might be in relationship to the potential biodiesel mandates that were released earlier last week, I believe. So some of that might be in play there a little bit, but overall, very quiet report upon the release, and in fact, we've seen more volume in the last 5 minutes, particularly the last minute of trade than we've seen upon the release of the report today. So that aside, what do we look at from here from this point forward? Obviously, continuing demand. We're seeing very strong demand. Export sales this week were better than expected for corn, beans, and wheat. So we did see some strong export sales numbers this week. So we're going to continue to monitor that demand, especially in the soybean market. When will China start to back off on their strong demand? It's usually front-loaded. So we'll keep an eye on that. and particularly the dollar as well, the relationship between our dollar and the Brazilian real that comes into play as far as demand is concerned as well. But increasingly, from this point forward, we're certainly going to continue to keep an eye on South American weather, and you're going to have a lot of weather premium continue to fluctuate this market and the soy complex, and a little bit in the corn, but the soy complex is going to be the driver here. And talks this week of potentially drier extended forecasts with southern Argentina, so all eyes are going to be on that. They are slightly behind their 5-year planting pace in Argentina for both corn and beans, which is ironic that they're concerned about dry weather right now, even though we're a little bit behind on planting progress. Not sure how to read into that. Brazil, for all practical purposes, have their bean crop in, corn crop in. Actually, you'll see the northern parts of Mato Grosso probably start to cut beans by the end of the month, beginning in January, and they'll move in with that safrinha corn crop there. Again, that's a month off. We'll keep an eye on weather. Sunday night's weather direction will be somewhat of a key. We're looking at rains coming in. That 6 to 10 day forecast should be showing up the end of next week. Sunday night's weather forecast may bring more rain in, may push it out a little further, and that could drive the market, or at least I suspect that could be the major driver here this week. The other thing is the money flow. We mentioned with the dollar being stronger, the equity market stronger. We're going to see some rebalancing with the funds or not. Taking a look at the money flow this week, we didn't see a whole lot of change with the managed funds. They're still holding a short position, corn around 72,000 contracts. That's fairly neutral in the range of things. Wheat, they're still holding a large short there, 115,000 contracts. Wheat, beans are still holding a large position, not record large, but still a substantially large position, 123,000 bean longs, and that's through Tuesday of last week. Probably didn't see a whole lot of maneuvering this week. Again, we'll continue to monitor that on a weekly basis. But weather will be the key as we take a look here at the balance, or start the week out next week. Livestock complex, cattle seem to go nowhere this week. We've seen a grinding fashion, volatile trade back and forth, and somewhat of a range. Cash has yet to trade this week in large volumes at the time of this broadcast. We did see a light cash trade on the Fed Cattle Exchange. A little over 3,000 cattle traded, somewhere around 110.75 was probably the average guess, or the average trade of those 8,000 that were offered. We are hearing some light cash trade out in the country, 110 out in Kansas and Nebraska, a little bit out in Texas as well, some 107, 108 stuff in Iowa, some 70 stuff in the meats as well. We've seen boxes firmer to start the week, but we did close a little bit weaker to end the week as far as the beef cutouts are concerned. As I mentioned, we've seen a sideways trade. I think we're still trying to decide which way to push this thing. This point forward, there's arguments both ways. I do think a couple bucks lower probably would find support here in the short term. And obviously, if we can rally this thing higher, I think it's going to be a selling opportunity in some of those deferred months if you can lock in some profits there. Taking a look at the hog trade this week, we've seen a very impressive rally this week. Considering we had an outside week down last week, we're looking some follow through to the downside this week, but we've seen some very large buying taken on the open, and hogs gapping up this week in the hog futures. Somebody wanted to own hog futures this week. The interesting part with this rally is that we've seen open interest decline. Usually when you see a big move in a futures contract, you see the momentum trade coming in, and you see an increase in open interest. What this suggests to us is it was a short covering squeeze, meaning that there may not be much left to the upside. Not to say that we're going to see a vacuum back down, but certainly if open interest declining the way it was certainly driving the shorts out. What was the reason for that? Cash has been strong as well, but it felt like futures led this rallying. Cash was a follower at this point. We did see cash sell off today for the first time in a while, so And we're looking at that October contract to expire next week. The index has come up in relationship with the futures, but it'll be interesting to monitor the cash trade next week if it's signaling that maybe this is to the point where it's enough. Now, there's been a lot of talk about the strong exports for both beef and pork, and it is true that we have seen those, but we were looking for strong exports. Keep that in mind. In fact, pork exports may not be as strong as what we were hoping for, but the very strong exports have gained a lot of the press right now. So you take a look at exports in general, not just cattle, hogs, but take a look at corn, bean, and wheat. There's a lot of concern moving forward with the new administration and trade talks, tariffs, and so forth. And there is some concern that maybe we're seeing a little front-loading by these countries just to get their stuff bought before anything transpires, yet to be determined. But that's something we need to keep in the back of your mind. With that, I hope everybody has a great week. Thanks.